Crypto products and NFTs are unregulated and can be highly risky. There may be no regulatory recourse for any loss from such transactions.
Hello, and thank you so much for joining us. This is the first episode of ET Markets Presents Crypto Academy powered by Mudrex. And to kick off the web series, we have with us Ajeet Khurana and also Edul Patel, who is the CEO and co-founder of Mudrex, which is a crypto investment platform. Thank you for joining us.
Thanks for having us, Apurva.
Thanks.
So today, we seem to be at a precipice or already in a bull run. So, we wanted to really understand for the viewers how to navigate a bull run in a crypto market. But before we get into that, it would be great to sort of understand how you two individually began your journey in the crypto space. What motivated you and when was it? So maybe Ajeet, if you want to start.
So since the 80s, because I'm very old, I'm 53 years old, I've always been attracted to new financial instruments. In the late 80s, it was more like the stock market. Early 90s, it was mutual funds in India, and went on getting more and more esoteric since then. So my first introduction to crypto assets came much less from technology and much more from the financial dimension of it. I wasn't too impressed when I merely looked at the financial qualities of this asset, but when I combined it with the blockchain and the decentralized paradigm, I became convinced that this was not a flash in the pan. It was not one more tulip or hype. It was something that would fundamentally change how we do business, especially how we do finance. And that is how I started in September of 16 to start making investments. I started exploring this, by the way, 2 years prior to that.
Right. And I'm sure a lot of research must have gone into it before you decided to, make your first investment, perhaps Bitcoin. That's where usually people start.
So the interesting thing is that at that point, in 2014, there was really only Bitcoin. As in, there might have been an Ethereum in the background we had not heard of. And by the time I started buying, there were really only those two choices. Research, which is extremely important, and that is what has prompted me to come even on this program so that I can talk to viewers about it. Unfortunately, at that point, was not so easy to do. Like today, there is lots of stuff available online to research. At that point of time, almost everything was engineering oriented, not financially oriented. So yes, I did do the research, but it was not easy at that point of time.
Right. Edul, what about you? When and why did you get into crypto?
I think my story is slightly different. I was at Deutsche in 2012, and a few of my friends, we were at the Deutsche desk and we were a part of the FX trading team, and a few of my friends were at Deutsche starting to talk about this random thing that was being traded on something called as Mt. Gox that went up 300% in 2 days. And it was like कि यार ये Bitcoin कुछ तो चल रहा है. It seems interesting, and let's discuss कि क्या किया जा सकता है. I ended up reading a bunch of things about crypto and Bitcoin, then did not participate in any way, shape, format. The same conversation again started in 2013 when me and those same bunch of friends started another email thread that says Bitcoin has reached $100. Are we too late yet? I still have that active email thread going on from 2013 to 23 now. But a similar set of conversations were now more meaningful. Let's keep the price aside. Let's start looking at what is going on. What is this asset class that people are talking about? And I was in the bank, and I was in Deutsche, right? And Deutsche was one of the banks that was most impacted with the 2008 financial crisis. And so a lot of the conversations that were happening were with that lens. Okay, this is a new financial instrument that is being thought of, a new monetary system that is being thought of, and so on and so forth. Those conversations continue to happen up and down up until I think 2016, 2017, which is when I was leaving my job. Then I was heading product at Tabzo, and Tabzo was being acquired by Amazon. I didn't want to go to Amazon and wanted to do something different with my life and wanted to work in the financial independence and financial services space. And in 2017, was started to look at catch up what products can we build that can help people get to financial independence faster. And we felt that almost surely in most of those places, the problems were lack of information and education and lack of just general accessibility to products. And the third part was that financial services were accessible mostly to the rich simply because it was just inefficient to give those services to most of the world. So we felt, yeah, research we can't solve alone. We have to do things, but we have to participate with many other players like what we are doing with ET now. We also felt that access to information and making it cheaply available is something that is fundamentally requires a change in infrastructure, and crypto somehow enables that change in infrastructure. And by then, ETH, etc., were out there, and smart contracts was a thing that was being talked about. Really believed that crypto will be a part of our future. In what shape, what form, what magnitude, all of that continues to vary as time progresses. But it was very clear that it was going to be a part of the future asset classes that people would hold. And that's why I just decided to jump in, bought my first Bitcoin in early 2017, I think June, July 2017. Then bought a bunch of other tokens. In 2018, in end of December 2018, I remember sitting with a friend over a 4-day period, analyzing 100 crypto tokens, trying to figure out ye kharidna chahiye ki nahi kharidna chahiye, kharidna chahiye ki nahi kharidna chahiye, and we created a portfolio of 6. In hindsight, maybe just one of them worked, but it's fine, right? That process helped us understand what were the problems, and that's when we decided to start building a crypto investing platform in 2018. So that's the journey that we
So
went.
that's amazing. And you touched upon this entire thing, and even Ajeet did, of researching and understanding and how to choose really where to invest. So, one of the biggest criticism, or what skeptics often say, is that companies and stocks are valued on tangible products. There is revenue, there's cash flow, there's governance. But when it comes to cryptocurrency, it's a bit of a, wild west, if I can, use that term, because you don't really know at the end of the day what you're buying into. A lot of it is promise of something that might or may not happen in the future. So what really gives value to cryptocurrencies, if you can help us understand that, and what are the key factors that determine the price of cryptos? Ajit, do you want to go first?
Yeah, so the thing is that this criticism at a very high level is not valid. When we look closer, there might be certain validity to this criticism. This criticism is valid only for those who are effectively asking, why does a crypto token not have the same economics as an equity share? As in, that is really the criticism. Because at a very high level, what does an equity share get valued at? Let us not get into whether it's a multiple of earnings, or in a real estate company, is it the land bank that they have, and in a financial services company, is it the net asset value that they have, etc. Let's get into the fact that all of these represent an underlying activity which creates value. How that value gets captured, like if you're talking of PayPal, MoneyGram, Paytm, you might want to see how much money they transmitted. Right? So if you're looking at something which is a financial holding company, you might look at the value of their holding. Similar, in some cases, identical concepts exist even in crypto. However, one fundamental difference between crypto assets and equity shares is that equity shares, by definition, give you a proportionate ownership into the underlying asset, while a crypto asset may give you that, in which case it would be called a security token, but it may also give you ownership over, let us say, a stream of income. It may give you ownership over transactions or gas fees, etc. As a result, I think that there are very strong correlated fundamental factors. Just as an example, how much money did MoneyGram, Western Union, or PayPal transmit over the last 12 months? You'll come up with a value, it'll be a couple of $1 trillion. Now, my question is, how much money did Bitcoin transfer in the last 12 months? You would also have a corresponding number which runs into trillions of dollars. So both of them perform the same role, at least as far as this role is concerned. So if Western Union and PayPal have a market value based on their stock price, it is reasonable to have a market value here also. I think that at the heart of it, this is my closing thought on this, at the heart of it, I think the confusion or criticism arises because crypto assets are a new asset class. There has been no new asset class that human beings have experienced for generations. Part of ownership, you could call it partnership or equity, has been around forever. Real estate has been around forever. Food, agriculture has been around forever. Right? So these asset classes have been around forever. So we do not know how to react to a new asset class. So we have no choice but to compare one asset class with another. But you know that comparison will always fall short, because at best it will be an analogy.
Correct. So I think just adding on to what Ajeet said, See, with equities, even inside equities, a car company is valued differently as compared to a financial services. Those, they like, just the metrics that you look at for both of these companies are very, very different. The spread or that dispersion in crypto is even larger, right? Because crypto in some senses can be some format of security, as Ajeet mentioned. In other senses, it is purely an asset or a stream of income or some ownership rights that it represents. And as a result, valuing these different tokens needs to happen differently. I think there is another criticism which is seen quite often where people say कि टाटा तो मेरे को पता है कि ये कंपनी है, ये दुकान है, ये एग्जिस्ट करता है, बट ये इथीरियम के लोग कहाँ हैं, ये इथीरियम कहाँ है, right? Like that need to physically perceive and see that okay, this thing exists and it has users and so on and so forth is something that a lot of people criticize on. And I think even on that front, there are various examples, even in the equities world, where only after companies became larger were they well known or well noticeable and so on and so forth to people. So I think what needs to happen here is that the understanding of how crypto needs to be valued needs to emerge. And that is something that has been happening over time. Now there are platforms like Masari, which give a lot of detailed reports to that matter. They give quarterly breakdowns of earnings of protocols and how they should be valued and what is network value and what is the value that they are trying to deliver. And as a result, come to some estimated guess of how much this platform is worth and whether it's overvalued or undervalued, right? Now that's a process that's emerging. It's the same process that emerged in equities over tens of years. And today, sitting in 23, we are saying that, oh, ye to obvious tha. In the 70s and 80s, none of this was obvious and all of this evolved, right? And that's the same evolution that crypto will go through as an asset class. And
Edul,
I think that's
Edul, I would like
okay.
to actually, take off from what you said with the permission of with your permission. So, we are right now comparing equity with tokens. Actually, a more interesting discussion can come if you list with traditional equity with startup equity, right? Because there's no crypto there. So every time one of these startup companies come up with an IPO, the media is abuzz with, oh, they are loss making. And, because we have this one way we want to evaluate it. So a very famous gentleman in the stock markets, he's no more, so I'm not naming him. He had, famously said that Indian hotels has all of these huge buildings and Oyo rooms only goes and puts up its board on top of hotels. How can Oyo rooms, which just owns a board, be worth more than Indian hotels? But the market thinks otherwise. So I think that a lot of this, it has a mindset issue associated with it also.
Correct.
Especially in the post-COVID world, for people to start appreciating that, the virtual may be as good or even better than the physical. I think we have to start reconciling to that.
Now, I think that pathway will emerge. And it's like as time progresses, as more and more people come in, more and more financialization of the asset class happens, that pathway will emerge. It will necessarily emerge because that will happen. It is an ask that everyone wants because no one wants to gamble, right? Everyone wants to take an educated risk or an educated guess and have confidence in their decisions. And as more people start coming in, that confidence will emerge. It's an outcome of interest.
Right, but like both of you pointed out, the industry is fairly nascent. We are still trying to figure out a lot of things. The financialization needs to happen. The systems need to evolve. And of course, we can't ignore what happened in the last 18 months, be it in terms of the collapse of major institutions, financial penalties, or imprisonment of different crypto founders. In that backdrop, how advisable it is for a small investor, who from the outside is looking at just the risks involved and this industry yet to be proven, like a real world scalable solution still to come out. What are the factors a small scale investor should consider when evaluating if they should or should not enter?
So I think investing in anything is a balance of greed and fear. It is just you need to make sure that you are tapering both of them so that you are able to take informed decisions. When it comes to investing in things like crypto, of course, if you don't know anything about it, the first thing you should do is read about it and try and assimilate information as much as you can and get started. And for that matter, just like how it's now typically advised to most people, if you've not invested in any equities world, you should start off with investing in an index fund. Right? That's the most popular advice that's given to people who are wanting to start up. You set up an SIP in an index fund and get started from there. Right? I think a very similar analogy exists in crypto. Like if you don't know a lot about it, but you've heard about it and you want to start participating so that you get a sense of it, you should only start with Bitcoin or let's say the popular top 5 or top 2, top 3 tokens, maybe Bitcoin and Ethereum, and set it up in a way so that you are growing with it. You're trying to get your learnings improved, you're trying to get your understanding improved, and you're not going all in and then committing to it and then being affected by a large loss because of some uncertain reasons. So I think there are, and I think this is where things are different, right? Or should be different this time around. Last time, in the last bull run, in the run before it, it was driven almost surely always just too much by greed, and too much by greed from the extent of participating in these obscure tokens with just the interest of, oh, I want to double my money. And if people intend to do that, they will again lose. That is natural, right? And it's not just a crypto problem, it's an investing problem in general. If you're ever investing in something where you expect to double your money and go, it's a very large likelihood that you will lose money. Rather, what should happen is that you should try and get a sense of what is going on. Start small, have a plan to build it out over a period, and over that period get confidence. And of course, don't invest in anything that you don't understand. Like, you don't do it for stocks. Why would you do that for an asset class that's at least more obscure than?
Ajeet, do you want to add anything to that? I'm sure a lot of young people must be coming to you for advice, like, should we invest? What do you typically tell them?
So yeah, so in the late 80s, early 90s, people would ask me about the stock market, as in where should I invest? In the late 90s and 15 years following that, which startup should I invest? For the few years after that, it's like which crypto token, and now they even ask me which NFT should I invest in. My answer is never a specific suggestion for obvious reasons, right? Number one, there's no upside in telling people that. Number two, I have nothing to sell, and with a disclaimer that I'm not a financial advisor. See, here's the thing. Fundamentals of asset allocation never change, even if you're looking at a new asset, right? So you have to, based on your income, age, risk profile, expenditures, etc., decide what your pyramid looks like and how much of it you're going to put in high risk. High risk could be categories such as the stock market. More high risk could be startup. Crypto would also come into the same bucket. The moment you have made an allocation, regardless of whether it's 1% of your disposable income or whether it's 10%, or in my case, it's much, much more than that, because I feel a little more empowered in making this decision. But once you have reached that, I think a part of your high risk probably makes sense to put it in crypto. In my case, first of all, my high risk portfolio accounts for more than 50% of my net worth, not recommended for the ordinary person. And within my high risk portfolio, almost all of it is in crypto. Once again, not recommended for the ordinary person. You have three approaches. Either you go very big, large cap, right? In the stock market, there's a clear large cap, mid cap, and small cap. In crypto, it's Bitcoin, Ethereum are large cap. Everything else is small cap. Within that, Bitcoin, which today stands at around 0.8 trillion market cap, is the real large cap. So you could, instead of taking an index fund, you could take Bitcoin only. Right? That would be the equivalent of it, because that is what moves market. I wish, just like every regulator around the world, it always advises that retail participants could consider getting participation through the mutual fund route, right? What has happened is that this basket of goods which other people manage. So if you don't want to get passive index funds or passive Bitcoin, you should get active fund. Unfortunately, not enough of these have emerged to become like clear de facto standards, as would have happened in the stock market. And I think that would be the next stage of evolution, in the absence of which, come up with your asset allocation and stick to the largest of large cap. So for example, SBF gets arrested and whoever else, Do Kwon gets arrested. Who has to get arrested for Bitcoin to get affected? Really, there's no one individual, right? So if you go to the largest of coins, they are not very individual driven, and that is what gives you one layer of safety.
Yeah, that's a good point. But Edul, going back to what you said, about the last bull run, in India, we saw millions of people just join and, start their investment journey in crypto. And we seem to be getting into another bull market, although there's been a bit of volatility in the last 1 week, which I think is standard for crypto. But there is a halving that's going to happen. There is an anticipation of ETFs launching. So with so much, build up that's going on, how should retail investors think about the next year and their investment strategy? What are the mistakes they can probably avoid, which were made in the last bull run?
Yeah, absolutely. So I think learning from mistakes is the most important thing that people should do. And a lot of people have participated in crypto and have had their share of mistakes, right? Fortunately, a lot of things have also evolved in the market. So I would want to focus on mistakes people did and what they can't do. For example, one standard mistake that people did is they started investing in tokens because their friends or family members or random brother, sister, uncle, chacha on a Telegram group told them ki Solana khareed lo upar jayega, right? Whatever, or replace Solana with whatever your favorite token. And people did that just out of that sheer greed. So step one, don't do that. Start with the, as we've discussed, blue chip ones, then go ahead based on what your interest is, based on what you understand. The second thing that happened was that last time around, there was actually a lot of regulatory uncertainty around which entities you should go and purchase from, how do you buy, what do you learn, and so on and so forth. And I think a lot of that has also changed. Like with the tax rule coming in, there is clarity on how returns will be adjusted. And with FIU coming in, there is now a clear registry, right? Like, for example, just a few weeks ago, there was a list published in the parliament of entities that are allowed to help people participate in crypto. And now that a list like that is clear, you also have a clear set of people with which people can participate because they are in some ways or the other accountable with some regulator, right? So that's another difference. Don't go to places that are where there is a large risk of you probably ending up losing money. There are some regulated registered entities with whom you should participate. The third recommendation, at least that I have, is that ideally never go in one go. Start small, slowly and steadily build. That's what you should always do. And the fourth thing is that I think the reason why people insist on doing your own research is not that if you do your research, you will be right. It's never that, right? Like, because at the end of the day, after all of research, you are still taking an educated guess. The reason of doing that is that you are more confident with your choice. And even if the choice goes against you, you don't have regret. And that's what people should follow. They should take that confident, choice-based approach of participating. And if they lose, they lose. That's a part of the decision-making setup. And that helps you make better decisions in the future, in my opinion. So I think these are some of the basic things that people can avoid. And again, this is not new for crypto. This happens in every single asset class.
Yeah.
People go through these cycles always. In fact, like one of my most favorite books that I've read in the last 3-4 years is a book called as Psychology of Money by this guy called as Morgan Housel. He's a brilliant author, and it just talks about all of these things that are linked with investment in anything, not just crypto. All of those principles are common here. It's the only difference is it's just a different asset class that has a different structure around it, and that's the only thing that we are looking at.
Yeah. And Ajeet, I would, following up on what Edul just said, in a bull market, there's a lot of hype. There's a lot of marketing of new tokens that starts coming in. You want to make quick money. But so how do you think we can discern a quality project from all the noise and marketing that's building up around a token?
So yeah, building up on what Edul said, let me first tell all of you viewers, you heard what Edul said. You know he's right, but you're not going to do it right. Because when the bull market comes, you lose all sense of proportion. So taking off from what Edul said and what Apurva asked, fundamentally, I could just break all investment opportunities in crypto assets into 3 buckets. One is established large old tokens, which would barely be like a dozen or max 2 dozen in number out of the 25,000 odd. Number 2 is the smaller cap, which are shockingly small compared to the larger cap. Unlike the stock market, where small cap might not be like a micro nano cap. And the third, which Apurva asked, which is about new projects coming up, which means these are not even listed. If you are new to the game and you really can't answer questions like what would cause the price to go up or what are the fundamental levers of price, first I would say stay away from the new issuances. Because the new issuances have 3 or 4 risks which the listed assets don't have. Number 1, the new issuances may never get listed. Unlike the stock market where it is a given that they get listed, here it's not a given. Second thing is there is literally no track record of the earning or performance of the protocol translating into any market value. And then again, there is no real reason to believe that there will be performance to begin with. So I would say that it's much, much riskier to participate in these primary issuances. It is also a fact that the maximum rewards that you can earn tend to be from the primary issuances, which is what attracts people to those. But for the new guys, I would say try to participate in the listed part unless you get confidence. Second thing is that if indeed, again, like Edul said, that your uncle told you that, hey, I have heard this is good, or your friend said I'm going all in on this, and you are unable to control your emotions and you want to invest, please invest a small amount. The amount should be only as much as you are willing to lose. And I would go so far as to say that the only reason you'd be tempted to double down and go all in is because you might think this is the opportunity of a lifetime. Believe me, even if it turns out that this was the opportunity of a lifetime, it is really not the last opportunity of the lifetime. In a new asset class like crypto assets, which have so much volatility, every few days and certainly every few weeks, these opportunity of a lifetime keep coming. So don't go all in. People who have their portfolio of crypto assets concentrated on 1 or 2 or 3 assets, I would put myself in those, really are taking a huge risk. I do that because I have probably spent years studying those assets. When I concentrate on a particular asset, that asset has been around for many years. It has survived more than one bull market and more than one bear market. Only then I go heavyweight on it.
The Lindy effect, right? Like the longer it has been, the longer it is likely to be.
Yeah, so you're right. Edul, the Lindy effect. So let's put it this way. I know that neither you nor I would want to hazard a guess as to what prices can be and what returns can be. But still, I think you will agree with me when I say that if you were to invest in a large cap such as Bitcoin or Ethereum, you put $100 in that, or you put $100 in a real nano cap like 1 million, 5 million market cap coin, which does very well. Clearly, the smaller coin can give you returns which are far higher.
Of course,
like whatever percentage return. So suppose Bitcoin gives you like 100% return in a certain years, that guy can give you 100 multiple return, right? So that is the difference. And this is why people get tempted to invest in these, because indeed there is a track record of some coins giving you extraordinary returns. The problem is that nobody talks about those dozens or hundreds of coins which initially showed the promise of that and then went down to zero. So you have to be careful of that.
And just to add, this is the same with small cap stock investing as well. Like there are a lot of nano, micro, small cap stocks that will give you the insane returns that a lot of people accept, which is why some people do participate in those penny stock tradings and so on and so forth. But it almost surely ends up badly for the most people. And what you just hear are the survivorship stories, because everyone wants to talk about their profits, no one wants to talk about their losses. So please be mindful of that. Don't fall into the greed bucket. Start slow, start small, and then once you spend a lot of time understanding what you're doing, then participate in it, right?
Yeah, and one thing that's been integral to crypto and or the market seems to be disproportionately influenced by is social media, celebrity endorsements, memes. At least when it comes to new traders, they really pick up on these signals. Do you think they're important to crypto, or I mean, are these signals important to how one should formulate their investment strategy, or they should be approached with a lot of caution? Either of you can go first.
Let me just let Edul answer that, but let me actually expand your question by saying, Apurva, you're talking about the price action of crypto being driven by social media signals. I think there is no doubt that national elections in the largest democracies in the world seem to be affected by social media signals.
Yeah,
right? So I think that social media has come to be the de facto standard of research.
Absolutely.
And it comes with its attendant risks. But Edul, go ahead and answer.
Yeah, then how, given that it's de facto, then how does one really think through and trust the information that is there? And is it important to base your research on what's out there on social media?
No, so like it can be a good enough starting point to get curious, but I think that's where it should end. It should be that starting point to get curious so that you get interest. But if you're biasing your decisions solely and only by that, then it is almost surely not going to end up well for you. Because again, all of those sentiments spike, you participate, and then sentiment goes away, there are losses, and then you lose them. Right? So at least the way I think of it is that when someone is trying to oversell or overpromise, it is almost surely not true. When it's too good to be true, it is almost surely not true. That's like a standard rule that at least I try and practice. it is good to get curious about all of this from social media and content. It's always good to get some knowledge at the starting point, but then you should always have alternate sources that either reinforce that knowledge or don't. And again, this happened last time quite a bit, right? Like a lot of influencers were incentivized to do it, and they did it either because of the money or because they did not have lack of information, because they had lack of information about what's going on. There are a lot of financial influencers also who joined the crypto bandwagon and started overselling products that would have sounded riskier in the first place, and they did it without adding the caveats of risk around it. So typically when someone just talks about one side, कि अरे सब अच्छा है, सब अच्छा है, सब अच्छा है, तो सब अच्छा नहीं है, सब बुरा है. That's actually a very standard thing. Typically when someone over promises, it is almost surely not going to deliver. Typically when it sounds too good to be true, it is almost always not. So you can use these basic, very simple thumb rules to filter out your curiosity. Because as Ajeet said, like, social media is not going anywhere. It is where all our attention is most of the times, right? So it is natural for you to get a lot of information from there. But what needs to happen is that information needs to be filtered, and then decision making needs to happen as step 2 from there. And for that, you will have to do some format of your own research. And then at the end of the day, it's I think, in my opinion, a responsibility of platforms like ET or of like platforms like Mudrex that we help users make those decisions and give them, as I said earlier, confidence in the choices that they are making, so that they don't regret if the choices go against them. That's, I think, the real mental shift that needs to happen.
Ajeet, do you want to add to that?
So one very interesting aspect is that, the side of social media that the two of you have talked about tends to be people who are trying to influence your decision making. But there is a much better side of social media. See, if I want to research something, there's only 3 sources. One is market price action, assuming it's a listed asset. Second is underlying documents, such as what would be called a prospectus in the case of stocks, or what would be called a white paper in the case of crypto assets. But there's a third dimension which is extremely important, which is hearing live information from people who are core to a particular project, people who have founded a project, people who are in the team. And because of the ubiquity of crypto social media, the fact is that even the most important people in this space have started coming and releasing information only on social media, most notably Twitter. So when you go to these authentic sources, like if I want to know what Ethereum is doing and people who are in the Ethereum Foundation are actually informing us on Twitter, then that becomes the single authentic source. So I would once again nuance what Edul said. Of course, everything he said was right, by saying that social media is not social media. In the sense, what are you reading? Who are you reading? What is the motivation? Is that a financial influencer that you are reading? Is that the founder of a project you are reading? Is that the official handle you are reading? Or is there some sort of a social pump group that's happening? So be careful about what you are reading. And social media has a very important role. In my case, other than one-time read of the fundamental documents related to a particular project, my single largest source of research information comes from social media. Not being a technical analyst or a chartist, I don't place too much stock on the chart price movement. So I can neither get my research from market action, which I look at. I cannot on a sustained basis get it from fundamental documents, which I look at only once. My ongoing source of research actually is social media. I just am very discerning about who I am going to read.
So who are you reading? Because, I mean, you did mention going to the core team and hearing what they're saying, but we've seen that in the past that core team members can lie and they can give false assurances. Multiple instances of that last year. So, I mean, if social media is an important, window into the world of crypto signals, then where can users get legitimate and unbiased information from, barring the traditional news outlets?
I would actually not even necessarily say that you can get unbiased information from the traditional news outlets. As in, I think that there is no such thing, right? As in, when we have a term called alternative facts that has been created, facts are no longer facts. But having said that, if you are satisfied with the fundamental qualities of an asset, for example, in the case of FTX, which turned out to be a huge disappointment, actually the fundamental qualities were fine. The guy came and rigged the system and misused funds. This could not have been found by looking at the fundamental documents. But if you go back a few months from there and look at the Terra Luna crash, there, while hindsight bias is 2020, but one could say that fundamentally it was flawed, which means it was just a matter of time about when it would crash. So first, get comfortable with the fundamentals. The second part is, and people said that Sam Bankman-Fried may turn out to be the world's first trillionaire, and there are a lot of hype around it. The fact is that regardless of how much research you would have done on FTX, at least for until few months before it crashed, you would think very positively about it. I was neither invested in the
2
equity
days
of
also, I think.
Yeah, so which is why the world's biggest investors, famous investors, also took a position.
Yeah.
And that is because it turned out to be a very well orchestrated fraud. And even in hindsight, I cannot say that, aha, this is why I knew it was a fraud. It just turned out to be very well orchestrated, which goes back to what we said, that your asset allocation, and within asset allocation, your portfolio allocation has to have certain limits to how much you would go overweight. And you should regard this as a high risk asset in the same bucket as equity or startup equity, listed equity or startup equity. And as a result, make sure that you have certain amount of diversification.
Yeah, I would just like to add, like, again, that line, there will always be grifters, there is always be scamsters trying to scam you out of your money. Please be careful on a day-to-day basis. Don't get
Any
carried.
resources, Edul, that you can recommend to someone who's listening into this, that they can probably access to understand what's really going on with the project?
Here, though, at least if it is an established project, and when I say established, it's been around for some time, it's been listed in multiple places, there is user activity and conversations. You can, like, one of the best places to go is just join that platform's Discord group, try and understand what's going on over there, and get some feedback. There are numerous sources of information now readily available. For example, I quoted about a platform called as Messari earlier that gives analytics and insights. For that matter, even Mudrex has started a section called as Mudrex Insights, where we talk about the fundamental, technical, and sentiment analysis of a particular token that helps you take these investment decisions with confidence. So there are a lot of such places that are available, and which are also trying to make it easier, right? At Mudrex, our job with Insights is to make it easier, so that we want you to do your own research, just that we don't want you to go to 100 different pages to do your own research. You can just come to one place and maybe 2-3 other places and get that. So these are the places where I would recommend that people go to start collecting information and then build confidence and then go from there.
Right. So just one final question. I think no conversation about crypto is possible without the regulatory overhang that's always on the industry and the uncertainty that surrounds it. So obviously in India there have been some positive developments, with the tax code coming up. How should retail investors think about it, because it fairly still remains an unregulated industry? Government does not control the different cryptos that are out there. So how can investors think about that?
May I go for this, Edul? Because I have been part of multiple, interactions going many years back, more than 5 years back, in the Ministry of Finance and stuff. So my advice is not to crypto entrepreneurs, but to the audience, Apurva, you talked about, namely crypto investors. If crypto investors don't want to fall on the wrong side of law or regulation, it is not very difficult. Crypto entrepreneurs are having a difficult time. All you need to do is, number one, whatever money you are going to invest in a crypto asset, make sure that it originates from your account, such as a bank account, such as your wallet, right? Do not let it originate from currency notes or cash. Don't touch that. That is where all problems arise. Secondarily, whenever you are transferring your money from your bank, please transfer it not to another individual, unless of course that individual is your cousin, your brother, or somebody you know very well. But other than that, please try to avoid peer-to-peer. Instead, transfer money to a regulated, registered exchange. Currently, there's a list of about 25-30 that was released in Parliament as to the ones which are reporting to the Financial Intelligence Unit. Try to restrict it to that. Third, make profit, make loss, whatever. But when you reconvert your crypto asset to fiat, please bring money back into the bank. And all along, make sure you're paying your tax. If you do this, start from a bank, end in the bank, and pay your taxes, I cannot visualize any problem In fact, the general regulatory or legal or all of those problems that people perceive, I think that most of those have to do with the industry and how they are regulated, and not for the retail investors. If you do what I said, I don't see a problem coming your way.
And just to add, by the way, surprisingly, Ajeet didn't talk about anything what is different from how you would invest in an equity. Right? So just follow the basic things that you do normally, and you should be fine. Like use your bank account, put it on a platform, take it back, pay tax on it, and be happy. And that will be. It's all of these are things that we've been doing for everything. So crypto is nothing special. Just follow the basics, and you should.
Edul, I would like to add that a lot of the misinformation, the two sources of things that scare retail investors, one is, all these words we will hear in news which will try to make this look illegal. And the second thing is that even their personal advisor, sometimes I have seen people talking to their CA, their chartered accountant, and say, hey, this is what I'm about to do. And the CA says, stay away from all that. That is messy, right? Now, a lot of people will not go even one layer below that to say, what is messy? Right? As in, what part is messy? Am I doing something cross-border? Am I doing something in Forex? What is it messy? And in reality, just like you try to describe it simplistically, if you do pay tax back in bank, I don't know what problem the retail investor would face. I cannot visualize it.
Like if there was a problem with this, the government would never tax it or set up an entity to monitor it and track it. Right? Like all of those are positive changes that are happening. We are still far away from there being a regulatory body that regulates it, but all of that does take time. At the end of the day, regulations will always play catch up and necessarily so because they need to understand the entire framework in which it needs to operate. As things stand right now, I think we are in a much better shape as compared to 3-4 years ago. There is a very clear pathway that most people can follow, and people should just follow that pathway. It's not something different that they've been doing from anything else.
Great. No, thank you so much, Edul and Ajeet. I think this was very informative. Thank you for joining.
Crypto products and NFTs are unregulated and can be highly risky. There may be no regulatory recourse for any loss from such transactions.